Hi, everyone. Just before we get going, I want to remind you that everything we talk about and discuss should not be considered as investment advice. The purpose of what we talk about on Catherine Murray Media and Markets on YouTube, as well as Catherine Murray in Conversation With on my podcast, should be viewed as informational and entertainment purposes only. Please definitely do your own research, your own homework, and definitely consult an investment professional before making any investment decisions. And also to note, some of us might hold positions in some of the stocks that we discuss. Hi, everyone, and welcome once again to the Top 5 at 5. Excited to bring you Bruce Campbell today. He's President and Portfolio Manager at StoneCastle Investment Management. And we're going to have a bit of a different take today. We're going to actually focus on some small cap names. That is Bruce's specialty and area of focus. And names you might not have heard of. So they often have very interesting stories behind them and sometimes can have great returns, but there often is a lot more risk or volatility. And that's why a lot of people who do invest in small cap companies actually do use a money manager who really focuses in on that. So Bruce, welcome. Thank you so much. And we're going to run through 5 names in 20 minutes.
Yeah, sure thing. Thanks for having me on.
Great. Let's talk about one of your, well, maybe, you know what, because there's just been so much volatility. Why don't we get your take in terms of the overall markets first?
Yeah, I mean, obviously that's been the theme of the year for sure, or at least so far this year is really that volatility. There's a lot of cross currents that we see, beyond the obvious, which is the Russian-Ukraine situation. We take a look at the Fed. We're concerned about what could potentially happen there. It looks to us like they might be setting themselves up to be tightening just as the economy starts to slow, which of course the market wouldn't like at all. It would be very similar to what we saw in October 2018. And how long they let that go before they would reverse course, that would be the challenge. So that's what sort of our major concern is right now. The headlines that everyone looks at, inflation, that's obviously front and center, and it's on the investment minds of everyone that's in the markets. And so, we're trying to navigate through that. Interestingly, though, one of the things that we saw is that this correction in small cap really started a year ago. So I think you could put your finger on February 16th, 2021 as the day that, most of the small cap market and a lot of the sort of riskier stocks in the market topped out. And since then we've seen quite a dramatic sell-off. There's been pockets of areas that have continued to do well, but for the most part we haven't really seen a lot of strength. That looks like it could potentially be changing. We're just at the very start of that, and we've started to see that in a few individual names and some of the kind of forward-leading technical tools that we use. So it could be very interesting. You could have seen this correction in the small cap, and then the small caps lead as the larger caps start to maybe go sideways or drop a bit.
You think that we might actually see small cap companies lead the market here?
Well, it would depend on a little bit on kind of what we saw from an economic standpoint, right? In that, if we were to see, because the market's always forward looking. So if we were to see the economic numbers starting to change so that either the Fed would back down on the number of rate increases that they were looking at, and right now I think the projection is around 6, is that what most people are expecting they're going to be doing. If that maybe came down because the economy was slowing, well, the market starts to look past that and looks to, okay, when are we going to start to see acceleration? And that's where small caps can do quite well. If you go back to sort of the COVID bottom, we really started to see the small caps lead out of that March bottom in 2020.
Okay. Let's, what we should have, I wonder though, why did we start to see small caps correct a year ago? What drove that?
Well, I think probably a part of it is, looking at kind of economic strength was one, because we have, we have seen economic strength there, but the comparable numbers from the year before, when things were so weak, became difficult for them to compete with, right? And then you also saw, you started to see some factors. You started to see inflation in there. You started to see hints of interest rate increases. And so I think it's a combination of a few different things. Plus, at the same time, we had seen such a big run up that people were looking for stability, and they were looking for, having liquidity in their portfolios. And so they just start moving out of the smaller cap stuff and into bigger stuff, because they know if they own that bigger stuff and the market starts to get volatile, they can get out a lot easier and a lot quicker.
Mm-hmm. Fair point. We've obviously seen WTI push through $100. And one of the names you're bringing us today is Avanti Energy. AVN is the ticker there. What's the story about Avanti? A name I don't know.
Yeah, so they're not actually in oil and gas per se. I mean, that'll be a byproduct of what they're looking for. But what they're really looking for is helium. And if you kind of followed what's happening with helium in the last few years, is there was a fairly strategic reserve of helium down in the US, and that's been depleted and or sold off. And now a lot of helium production comes from other areas that aren't as politically stable, Russia being one of them, interestingly enough. And so what Avanti has done is it's a team of people that used to work directly in oil and gas. The technology is the same, the exploration is the same. In a lot of cases, the helium is in the ground next to the natural gas and to the oil. And so what they did is they went out, they secured some land, and now they've drilled 2 wells. So far, they've drilled the first 2 wells. The first one sounds like it'll be economic, but it's not going to be, crazy as far as production. The second one, it sounds like they're really excited from talking with management, and they think that that could be, significant. Helium's used in a number of different applications, especially.
That's what I wanted to ask you.
Yeah. So, if you look at a lot of manufacturing, they use helium. If you look at something like an MRI machine, they use helium to cool down the machine. It's used for a lot of other things than just, the balloons that everybody thinks of from parties. And the price just keeps going up because of the strategic reserve in the US has been depleted. And so now the payback on these wells, they're not, in a lot of cases, these helium wells aren't the crazy, horizontal fracked, multi-fracked zone wells that they use in the oil and gas business. They're strictly straight down. They'll drill into the zone, they'll find the helium, and then it's a function of getting the proper amount of helium for the pressure and being able to remove it economically, because there's not, when you're drilling these helium wells, 1%, 2% helium from what's coming up out of the well is what they consider to be economic.
And who do they compete with? Like, who are the big players?
Yeah, so right now it's pretty fragmented, especially in North America. And so what you've seen some other smaller companies that have just started up as well. And then, there would be some bigger companies that have divisions. They wouldn't necessarily be standalone companies. They would have divisions. And then the U.S. government's been big into it, but they've moved themselves out of that market.
And what's the growth of this industry, though? I'm still trying to understand, the true end demand.
Yeah. So just from a use standpoint, the use continues to go up. So if you were, we don't have it here, but if we were to look at a chart of use of helium over the last, couple of decades, it continues to go up because it's used in a lot of manufacturing for high tech and computer equipment. And then it's used in some of that same computer equipment as a cooling device for a lot of that. So the demand keeps going up, and it will continue to go up. At the same time, helium stayed pretty stable as far as the pricing goes because the supply was pretty normalized. And then the strategic reserve in the US started to be diminished. And at the same time, you saw some other unstable politically countries that were in helium, start to have flare-ups. And the next thing you know, the price starts to rise. Interestingly, like if you look at helium, where it typically is found is it's found around uranium. So it's a byproduct of, kind of what's going on underneath the surface. And so, if you think about the Saskatchewan Alberta corridor there's a fairly big uranium corridor, and the thought is that there'll be a fair bit of helium. So there's a number of different companies that are drilling there, including Avante, and then that also goes down into the US.
And how has the stock been performing? What do you look at in terms of valuation, and so we can kind of get a gauge in terms of what the performance could be?
Well, it hasn't performed as well as we would have liked so far, and that's just been a function of delay getting drilled, right? So they had to get everything in place. They secured their property. They had to get everything in place, and much like everything, it takes a lot longer than you expect. They've drilled their first 2 wells. They had great success with this, especially with the second one. They haven't done all the completions on it yet, but just from their initial results, they're quite happy with what they see. And then they just recently raised some money, which took the stock down a bit when they announced the financing, because it was done, a lot of these small caps done at a discount with a warrant attached. And there's always a bit of arbitrage that happens with, some of the funds that are out there and some other investors where, they'll buy the unit, sell the stock to capture the warrant. So there's a bit of that that's going on right now. I suspect that probably stays in place until that issue settles. And then probably around the same time, we're going to get the completion results from the second well. They raised this money to drill more because they were so excited about what they see. So stocks, we've done relatively well because we were in really early, but it's off its high by, a fair bit. But we think that there's lots of potential there. If you look at kind of the cash flow generation, the payback on these wells, they're not super expensive to drill. They're not, the $10 million wells that you see in the oil and gas business. They're, a couple million. But the payback can be sort of 9 to 12 months once they get that done. So that's kind of what we're expecting. And this will end up, we think it'll end up being, a real cash flow generating vehicle here in probably 12 to 18 months time.
Okay. So again, that's Avante Energy, AVN is the ticker there. Let's take a look at what I think is a consumer-oriented company, Just Kitchen. JK, what's the company about and why do you like it?
Yeah, so if you look at the trend, and this started even pre-COVID, was that I think the stat is that the average American family orders in food twice a week, and that's even higher in Asia. And so, if you think about how most of that's done right now, you go on Uber, you go on maybe the company's website themselves, you order the food and it's made in their restaurant where there's customers sitting and also being served food. What the trend has been both in the US and now in Asia is to have commercial kitchens that only produce the food for takeout. And so you can have a commercial kitchen that does multiple brands side by side, and you as the consumer would just go on their app and order, and you could pick one type of food from one restaurant and another food from a different restaurant brand, and they'd be made in the same kitchen and delivered out to you. And this is the whole ghost kitchen phenomena. If you look in the US, there's several of them. So Just Kitchen is in Asia. They've specifically focused on Asian countries, and they have multiple Asian brands. And what they're doing is they're effectively building out their hub and spoke model. So the hub is a kitchen where it's a bigger kitchen where the majority of the food is prepared. It might be partially cooked, and then it goes out to the spoke. And the spoke is where the final assembly and final cooking is done before it's sent out for delivery. And they've got some pretty big brands. They just signed 7-Eleven in Taiwan. And if you sort of think of Taiwan or sort of 7-Eleven, and you think about the food that they have in North America, but in Asia, they even have more food options and more people order food from 7-Eleven. So they're going to be doing the cooking for 7-Eleven. If you look at some of the brands that they have a few North American brands, but they have some fairly big Asian brands. They're not brands that are familiar to me, but they're certainly brands that are big over there. If you look at the numbers of the company, they're really in growth mode. So they are spending money right now to build everything up, but they have 21 of their spokes now, and they continue to raise both the average price of what they're selling, and then the number of orders that they're fulfilling. So they just reported their numbers. They had great revenue growth. They're not seeing anything from the bottom line yet because they're spending so much money to continue to expand. But it's one that, I suspect they'll continue to grow through this year. And then at some point in time, they'll probably end up being a takeover target. We don't invest in them just purely for a takeout target. We think that they're going to be, profitable on their own, but we think that there's, high likelihood that that's where this ends up going, as somebody takes a look and says, oh yeah, let's get an entry into Japan or into Asia, and they just come in and pick them off.
Interesting. But what kind of company? It's interesting though, because they do really depend, it sounds like, on brands wanting to use them, correct?
They would for some of it. They've also built some of their own in-house brands as well, which they've done. But if you think about, say you're McDonald's or Burger King and you want an entry into, strictly delivery food, and you find that it's more efficient, then you could do a deal with them. You'd still have all your existing restaurants, but you would just do a deal with them so that now you're selling your product through their store or through their kitchens.
Interesting. Let's take a look at another one. Verano Holdings, VRNO is the ticker there.
Yeah, so this is in the US cannabis sector, and we think that there's tremendous opportunity here. It's really a function of time before something happens. Everyone kind of looks at the Canadian market, and it's been very challenging. There's probably been lots of missteps if you look at what's happened. In the US, it's a lot different. In most of the states, especially in the eastern side of the US, they're limited license states, meaning that the state government has limited the number of entries that can be in that specific market. And they usually have a formula for how they increase that. So the number of patients, the number of sales, and then that's when they start bumping it up. Verano is in the US, they're in, I believe it's 15 different states right now, if I remember correctly.
Wow.
And a lot of those are limited license states. Now, the interesting thing with Verano is they went public last year, almost a year ago now. It was a year ago, February. And at that point in time, that was kind of the top for the cannabis market as well, both Canada and the US. And they didn't really get the valuation that you would have expected to be on par with their peers. And there was a couple of reasons for that. One was that they were just going public. The second is that, with a lot of these RTO transactions that we saw in the cannabis sector, the principals had tons of stock that was escrowed or locked up for a certain period of time. And investors are always concerned coming into those lockup periods, are the executives going to be selling shares? We're now through that whole period, and they never really did get the valuations. They traded about half the valuation of their peers, and yet they're growing at the same rate or faster. They're profitable, which is something you don't see that often in Canada.
Yeah.
And the revenue continues to ramp up. So they've been growing their revenue. Depends on quarter by quarter and kind of what they're adding and what they're not. But, you sort of see 25 to 50% revenue growth, and you're seeing EBITDA growth in kind of the, 20 to 40% range as they add new states and come online with different programs there. And the kind of beyond just the business growing itself, there's a couple of catalysts that could happen. One is that over the last year, we saw a number of the US custodians step away from cannabis, where they said, look, we're not going to allow you to hold cannabis stocks anymore. It's federally illegal. And even though it's maybe state legal, we're not going to do it until they're listed on bigger US exchanges, because most of these cannabis companies right now are only listed on the CSE in Canada. And so there's been multiple attempts to pass what's called the SAFE Act, which is the Banking Act for cannabis in the US. If that was to get through, then at that point in time, it should allow for these companies to list on US exchanges, even though it still may not be federally legal in the US nationwide. It would allow them to list, and then you would see institutional investors in multiple areas be able to come back in. And then the other thing that would be, kind of the lottery ticket is the federal legalization. And, I don't think that's a function of it happening. It's just a function of when it happens. So it might be, 2 months, 2 years, 10 years away. I don't think it'll be 10. I think it'll be less than 5. I think it probably happens before the next presidential election, which will be, 2.5 years away. So I think that's when it happens, but that would be, huge for the companies in the sector, and Verano obviously being one of them.
Very cool. A name to be aware of. You've got 2 in the healthcare space. We've got just a couple minutes left. Let's talk a little bit about them. Solona Global Medical Devices, so SGMD.
Yeah, it's a really interesting company led by a gentleman by the name of Les Cross. And Les managed a company called DJ Global. And if you look at what he did there, he raised about $150 million in total to start this company. It was a small equipment manufacturer and equipment seller, and they sold it out to private equity for around $1.5 billion. So a 10 bagger over about a 5-year time frame. Took a few years off, and now he's come back to do it all over again. What their specialty is non-surgical medical devices. So this is not something that's used in an operating room, but it's something that's used after the fact in a doctor's office for rehabilitation. They started off by they went public not quite a year ago, last June is when they went public. They started by buying a manufacturing. So they're able to manufacture all their products, and then they bought a medical device product company. They've got multiple other acquisitions lined up. They've made some acquisitions of sales companies. And so what they told us when they went public is that they would do, I think they said that they would do 3 or 4 acquisitions before the end of 2021, and that they'd be a run rate of around 40 million revenue. Well, they didn't get all those acquisitions done just because, that's what happens in business. Sometimes it takes a little bit longer to get the deals done. In one of their instances, they were, kind of at the altar with a company, and the principal got COVID. And so, that sort of delayed everything. Just means they just get pushed off. They've had strong organic growth because what they do is they cross-sell between the companies that they bought and, the existing companies. They're able to manufacture, so they have good margins, and they have huge room for expansion. Les has seen a number of different people that he had who worked with him at DJ Global all coming over to join. So they're just going to do it all over again. It's just a function of time.
Interesting. What's an example of one of their products?
So, they have, certainly in the past, they've had, different physio products that help, with enhancements of exercise and, so different stability tools. They've got, different types of needle devices, things like that.
Okay. And let's take a look at your last pick here, Neuroscene Health.
Yeah.
MEND is the ticker.
Yeah. So, there's been, especially with COVID, there's been so much focus on physical health. Everyone has discovered how much physical health has to do with, your well-being. Well, mental health is also something that's been super impaired. And so what Neuroscene does is they have kind of 2 different divisions. They got one division that has an AI technology platform that's working with drug companies. And what it allows them to do is to use their artificial intelligence to look at compounds and how those compounds could work in trials and what different indications they might work for. And so they've already started to sign deals where if the drug companies use their technology and hit certain milestones, they get paid, and then they would get paid a royalty on successful drugs in the market. And then the second half of their business is really an app-driven product for mental health. And it's quite interesting because they've had numerous different versions of it. They just rolled out kind of the Cadillac version, and it happened today, interestingly enough. And it takes you through basically a baseline of, okay, here's where I am from a mental standpoint. Now, what do I do to get my mental health higher? And so you basically are on this app every day using it, and it's not, I've gone through some of it, and it's not stuff that you go, oh man, this is really difficult. It's quite easy. It's quite simple. And you'll end up with stronger mental health scores from a memory standpoint, from a focus standpoint, from a creativity standpoint.
Wow.
And they've got a model for that. So they have a consumer model, but they also have a business model as well. So they'll go out to, a big company and sell this app to the company for all of their employees.
Right.
And mental health, we probably all have been mentally handicapped here through.
Absolutely.
So it'll be
Absolutely.
going forward.
Wow. And so what's the name of the app? Is it Neuroscene?
It is, yeah. Like I'm an Apple user, and I just went on the App Store and typed in Neuroscene, and it came up immediately, and it's called the Neuro app. So
okay. It's amazing all these apps. I mean, people might think, why would I do it? But you always have 5 extra pounds. Well, not always. I did, and I use the Noom app. I don't know if you're familiar. You're probably not familiar with it. So
I know what it is. I haven't
do you know
used
it?
but I know what it is.
It's amazing. It's
Yeah.
amazing because it's all psychology in terms of not controlling, but like understanding what you eat, what your triggers are, why you eat it. And I'm down 7. It's unbelievable that these apps are out there and that they really know how to use the psyche and the psychology behind all of this. So it's amazing. And people probably really do need it because we haven't been out for 2 years, really.
That's right. Yeah.
So
yeah, we all do. Yeah.
Yeah. Bruce, this was amazing. Thank you so much for your time today. And it's great to really be able to understand the story. So I appreciate you putting the time behind that.
Yeah, my pleasure. Thanks for having me on.